Let's go now to our friend Bimnet Abibi from Galaxy Trading. As always, Bimnet, thank you for coming on Galaxy Brains.
Thanks for having me.
Wow, big day, Fed day.
Unbelievable day.
And
Super Bowl.
And gosh, it is resulting in we'll just get right into it. It was a big one. They made news at this one. What did they say?
Basically, one, they kept rates unchanged. So they kept them, 525 to 550 band. Two, in the statement, they acknowledged that growth was slowing more than expected, versus the last meeting. Three, they updated their dot plot, which indicates that there are going to be 75 basis points of cuts in 2024.
Now that's the median across all of them now?
The median indicates a 75 bip cut.
Versus over next year.
Over next year versus the street side expectation was 50 for the dot plot. So they outdoved the street expectations, but market pricing was closer to 100 already, but that expanded because of the dovishness of the Fed. And four, during the Q&A, basically Powell essentially acknowledged that they're done hiking and that they're not even going to wait till inflation gets to their target. They're going to, in advance of that, as they see things, progressing and slowing, that they're going to be more proactive about cutting. And so it was a dovish message, right? It reinforced basically what was said by Waller, the other week, and the market took it insanely well. Dollar sold off pretty aggressively, looking at euro, dollar, yen, all that stuff. Gold ripped, through 2K. Crypto obviously reacted super well, with Bitcoin having a plus 4% day, almost testing for 4,300, basically, 1,000 to 2,000 points away from the year-to-date high. Russell was up like 3.5%. Dow Jones, new all-time highs for the Dow. It is bang on for risk assets right now. And, if you think about it, we just went from 9% inflation, a year and change ago to, it looks like, much more manageable levels of inflation.
The 3 range, right?
Yeah.
The 3 handle, yeah.
We just printed like a month-on-month headline that was 0. But, I personally disagree with the Fed and what they're doing right now. But in terms of what it actually does mean for markets, it means you're good to go to buy risk.
Yeah.
At least for the next couple of weeks. And so, that's kind of the camp I'm in. The counter to all that is the services part of the economy is still super hot. If you look at like super core inflation from CPI, literally yesterday, right, it printed 3.9%, right? And so in the labor market, you're still talking about 199,000 jobs added last month, right? An unemployment rate at 3.6%, and a housing market that's still super tight like crazy because people don't really want to sell their homes. And so I think the risk of reinflation is far greater than the Fed is acknowledging. At the same time, I understand that next year's an election year, and that if you have inflation coming in around 3% and your Fed funds is set north of 5%, you have very restrictive interest rate policy, right? And there are cracks in the economy with respect to lower income tiers and some things in the labor market. But it's really not that bad. And also, I'm just like, who the hell is really going to be like, the stock market's back at all-time highs. Crypto's ripping like crazy. Asset prices are coming back. And people are like, oh, yeah, that policy might be too restrictive. And we got to cut interest rates.
Yeah, it is strange, too, because we've talked about this before, but Jay Powell has long said that Paul Volcker is not a mentor, an icon for him.
Yes.
Paul Volcker dealt with this. They hiked because inflation went up. Then inflation started to cool. They started cutting. Then inflation came roaring back, and they had to hike like almost up to 20%, right? That's what he doesn't want to happen, right? That's what happens if you look at the CPI and the Fed funds rate from like the 70s and 80s. That's what happened then. So it does seem like incredibly dovish from them after they've been hammering us with higher for longer for so long.
Absolutely. And you know what? It's like
it's tinkering. They're tinkering.
They're traders like the rest of us. They're reacting to the data. However, I just I think you just need a little bit more like big picture understanding of like where things are going. And if you're talking about fiscal policy in an election year, right? people are going to be just sending money in the mail system, basically.
Right.
And governments are going to be spending, jobs will be added, et cetera. And that's inflationary, right? And then the other big thing, like every Fed, I'm like, Bitcoin makes more and more sense. And don't get me wrong, like that partially because I'm very biased with respect to crypto, and I work at a crypto
I don't think
firm
anyone
and I'm
would be
bullish.
surprised to know that you and Galaxy are long Bitcoin.
Correct.
I think it's pretty well known.
Fair enough.
Right.
But it's like, okay, like how did the curve react to the interest rate decision today? It steepened, right? 230s, 210s, et cetera. And that's because the front end went. But what you have to think about is the deficit stuff isn't going away.
Right.
Those long-term bonds still have to get funded.
I just saw
and the Fed's still engaging in their balance sheet reduction.
Yeah.
Right? And what, do you think the deficit's not going to expand in an election year? And so you're still dealing with a situation where the long-term fiscal viability of the U.S. and the ballooning interest payments, because we've raised interest rates so high and we've got to constantly refinance as, bonds mature, right? Like that's still a huge issue.
Yeah.
And easing rates in the front end helps, but the Fed's telling you simultaneously that, and the market's telling you that it's okay to buy risk assets again, but that the long-term stuff is still shaky. And so I'm like, wait, Bitcoin is a risk asset in lots of ways. And it also is a good gauge for long-term, fiscal viability.
Right.
And so I just keep seeing this curve steepener trade and thinking Bitcoin. And I'm not the first person to be
I see what you're pointing out, though. You're saying with the shaky long-term thing, that's telling you to look at something like Bitcoin.
Correct.
But with the short-term risk on, that's also telling you to look at something like Bitcoin.
Correct. And so, but again, that's like, you're talking about a very Bitcoin biased person, but I literally, I mean, the fiscal stuff is just insane.
Yeah, and maybe that's part of the impetus for trying to agreeing to lower, or also easing pressure on the banking system, which itself has been rocked by the rates. Right? There's those types of reasons maybe to push forward here.
No,
too.
absolutely. And then the other thing I'd like to highlight, and which you brought up, before this our convo, was how wrong central bankers have been historically.
Yeah.
Everyone is pretty much awful at forecasting inflation. And so you've got these markets, whether it's the Bank of England, the RBA, the Fed, right? Pick your central bank of choice, and the interest rate forward path looks like pretty steep cuts that are getting baked in, and more as they
become more dovish. Yeah.
But at the same time, people are really bad at forecasting stuff. Right. And all the time, people get stuff wrong. And the magnitude of what's priced now, you're priced to perfection.
Right.
Right? Like if you think long run inflation is somewhere between 2 and 3%, terminal rates are now 320-ish. Right? And the Fed terminal dots are 2 3/4, a little bit higher than that. And so you're basically priced to perfection in terms of the cut stuff. Mm-hmm. And I know that the Powell's telling you he's going to be more reactive than the past policymakers, because probably going to be looking at more of the high frequency stuff, and he doesn't want to cut when inflation gets to 2%, but it's more right before, seeing where stuff is going. And so I'm just
so there could be more interest rate volatility.
There has to be. There has to be.
Yeah.
And also, I mean,
which, by the way,
it just
also contrasts with Bitcoin.
Yeah, fair enough.
Which is highly credible.
Let's all acknowledge what the financial system is, right? It's a game of musical chairs, right? All these assets are inflated. The Magnificent Seven trading at insane multiples, right? The bond market now, nearly priced to perfection. And you got crypto ripping like crazy, memes ripping like crazy. I mean, I wouldn't be shocked if you had, I can't name the single names, but the popular meme stocks doing well again.
Right.
And so it's just so much froth. And are we just not concerned about it? Reinflation? Am I going crazy here?
I don't know. We're gonna have to wait and see. I should point out that the Fed for really a long time has been sort of signaling that this rate cuts would eventually come, right? And you were saying many months ago that the Fed, looking at prior Fed speak, that they were effectively telling you to buy risk assets. And of course, you pointed out, I mean, the Dow Jones Industrial Average Index today at all-time highs today. Yeah. Right?
No, I mean,
equities are basically at all-time highs.
Yeah.
And had a great year.
Phenomenal year.
And so did other
crypto,
risk assets.
Yeah, and it's crazy. I mean, if you read the Fed properly, basically, you basically had to understand what Powell's response function was when the data first started slowing, like, or when and if data started slowing, how was he going to respond? And I thought, earlier in the year, you got a sense that his response function is, oh, I'm going to normalize policy, pretty aggressively. It was kind of my read on his response.
He doesn't want to stay higher for longer. He just doesn't.
But I think the data though.
It may require it. Yeah.
I mean, you go out and people are still spending money.
Lots of it.
It's the one boon, to this market and to the Fed, that, I think the market's probably not properly appreciating is gas prices. We're talking about 10, 11 straight weeks of declines.
Come down a lot.
Crude's at sub $70 right now.
Gasoline at the pump is sub $3 everywhere I look, basically. And that's been a while since that was true.
And that impacts your sentiment.
It does.
That impacts where you think future inflation is going to be, right? And what's an important factor for determining future inflation? Expectations of future inflation.
Right. It says, wait a second. Prices are coming down. Because one of the only things that you if you go to the supermarket, maybe you look at the price, it's usually written next to the item. But most people don't buy that many things where the price is literally in a big giant LED board flashing right at you.
Correct.
And a lot of that truly is gas prices, gasoline at the pump. That is probably the main place where Americans see an index on inflation.
Prices. Yeah. And grocery stores, et cetera.
Right.
And, now that we're talking about inflation this way, I think it's always important to reiterate that inflation measures the rate of change of prices, not the absolute level.
Right.
And so all we're seeing is the rate of change of prices is now cooling.
It's decelerating.
Right.
But it's still going up.
It's still going up.
Yeah.
Right. Although I've read some stuff on, the housing stuff looks like it's going to start declining meaningfully in the figures, at least, because there's a lead lag effect and also just a lot more supply hitting the market. But, outside of that, prices are not back to where they were before we printed $7 trillion.
Yeah, exactly.
And mailed out money to every single person.
We've talked about this. They haven't really admitted, policymakers, whether in the federal government or at the federal bank, they haven't really told people that, guys, that's never going to happen.
I don't even think Biden properly understands that inflation concept.
Yeah, I'm not sure. So, Bimnet Abibi, my friend from Galaxy Trading, thanks for coming on Galaxy Brains, as always.
Thank you for having me.